Welcome to Investors Insights, where today's topic is on Fed and Recession Watch. It's an important week ahead as the Fed will be in the spotlight, which Ty will discuss. And I'll give an update on our recession watch list and the checklist that clients have been asking about. So first, last week, we saw a much stronger GDP report come in at 4.9%. And as you can see in this first chart, it's the strongest report we've seen since fourth quarter of 2021. Third quarter GDP more than doubled the growth seen in the first and second quarter. And while this is great news for the economy, the report actually caused further volatility in the market due to concerns around the Fed. So Ty, talk about the Fed meeting this week. It's one that's been anticipated for a while now, and what we're expecting to see with the Fed.
The Fed, we've been paying attention to them all year and even last year, and they're still kind of the focal point of what everyone's watching. They should release their data on November 1st, which is Wednesday. There is a 98% chance that they pause, according to the CME Fed Watch tool here, as you can see. About a 2% chance that they hike. So we're, obviously expecting a pause. They will have one more meeting before the end of the year in December. What's important, though, is to kind of listen to Chairman Jerome Powell's commentary. He's been very good at saying, not saying, this is a permanent pause, saying, we're still watching the data. We're still watching the data. That GDP report that you referenced is going to be a big part of it. So it's going to be interesting to see how he talks about it. And then I got one more chart here that kind of shows the expectations here for the next year or so, actually into 2025. And as you can see, kind of what the market's expecting is maybe one more hike and then start seeing rate cuts into next year. Again, I think we always kind of expect rate cuts, so don't take this, too much to heart. But it is important to notice that, mostly everyone's thinking we're towards the end of this rate hiking cycle and going into a new regime. So that'll be important to keep track of.
So while we're watching the market reaction to the Fed carefully, we're also watching the economy to see what negative impact higher rates and the Fed actions are having. And we have an ongoing recession checklist that we monitor every week. And so while the GDP report was strong, we are still seeing some cracks in the economy. So looking at this checklist, we monitor 8 leading indicators. And right now, only 3 are showing weakness. And those can be seen with the red X. So the ISM new orders says manufacturing has slowed. The yield curve is still inverted, which has been an early indicator of previous recessions. And the financial conditions remain tight, seen at the bottom there. And so while we will continue to monitor and share our recession checklist as we wait and see how the Fed and higher rates are impacting the economy. So this week, it's all about the Fed. We have some more earnings coming out, but really it's all about the Fed. So we'll keep you posted. If you have any questions about anything we've talked about today, please reach out and we'll see you next week. Thanks.